which is the only person in our heritage that we can find that matches my son.
That is amazing. I have a daughter who's a redhead with blue eyes, so very rare combo. Yeah.
Yeah, yeah, very unusual. Well, thanks everybody for joining us here. We were just talking about our heritage. I just found out that Rob and I both have a Portuguese background, so it's always exciting for me to hear. We will get started. We're letting people roll in here, and we will get started in about 30 seconds or so. It's always fun when you meet somebody that has a similar background on two separate coasts, that their history has come from a very similar place. So super fun. All right. Well, I think we're going to go ahead and get started. Thank you, everybody, for joining us today. I have to tell you, I have been so looking forward to this for several weeks, because I think it's just topical and it's very exciting, the things that can be done in the space that Longbridge supports. So we are here for the next big wave, unlocking opportunity in the growing senior lending market. With me is Longbridge Financial. We're going to have a 30-minute conversation today, guys, to explore the growing senior home equity space. And also for our lender members, listen in because it's one of the biggest opportunities to grow your lending today. So, with that, I'm going to introduce the two lovely people that I have with me. So I have Bill Nolan, who is the National Wholesale and Correspondent Sales Manager. Thanks for doing this with us, Bill.
Yeah, happy to. Glad to
And
be here.
Rob Gonzalez, who is the National Key Account Manager, both from Longbridge, of course. Longbridge specializes in the senior mortgage market. You're the largest aggregator of third-party originated FHA reverse mortgage business. And really the leading person out there leading innovation on these types of products in the market. So with that, I would love it if you would just share maybe a little bit more about Longbridge as we launch off our conversation here today.
Yeah, Longbridge, for most of our history, we've been in the business of reverse mortgages, and we're trying to change how we approach the market now, because it's really so much more than about reverse mortgages. It's really about how do we take care of borrowers who are in their 60s and 70s and 80s. It is a different segment. And that's what we really want to get into today is how we have changed and why we've done the change, why we've made the changes we've made, and specifically what that means for our TMC lenders and for all of our lenders across the country. And by the way, the opportunity has grown so much over the last few years. It used to be that very few of the largest IMBs were even offered this product. Now, if you
Right.
look at the Scotsman Guide, you look at the top 10 IMBs for on their forward production, the top 10, we all know the names. Nine of those have a centralized, dedicated group that does reverse mortgages and now senior lending. So it's
Isn't
it's
that
getting to
amazing?
be that's where lenders are going.
Yeah. I grew up in the day and age, so I referred my first reverse mortgage to Kim Wagner at Wells Fargo. I will never forget this. Back in 1992, I had a borrower that I was working with was looking for a solution for their parents at that point in time. And it was a very different market back then because reverse was seen more as if people were having income challenges or medical issues. Those are the primary two reasons why way back when reverse mortgages were done. And there were only a couple people in the industry that even delved into that type of business. So maybe we should start off by talking about like what do you mean by the senior segment in mortgage? What does that mean to you?
Question.
Uh,
Robbie, you can take that one.
sure. Yeah, and it means, and it's so interesting that you talk about referring your own reverse. That's a story similar to how I got into reverse. My grandparents were looking at one, and my parents said, "Hey, what do you think of this? What do you know about reverse?" At the time, I knew nothing. I wasn't in mortgages at the time. I have a legal and political background. Explain that, but learning about reverse, being very skeptical at first because you alluded to, the product was dramatically different back then.
Mhm.
Um, Dramatically different. But even back then, you could see the opportunity in the right circumstances for a borrower to see real value in it, and that's how I got into the industry. Was initially thinking that this wasn't sort of the path to go down for my grandparents, and realizing that no, it was the solution for them. And I loved it so much that had some great opportunities getting into in the space, and I've been here ever since. But I think when I joined Longbridge in 2017, when we launched a wholesale channel, what excited me most about the company at the time, and what continues to be the case today, is our focus on innovation, is our focus on helping seniors. Yes, for much of our legacy, it has been specifically focused on reverse, and there's good reasons for that, right? About 40% of people who hold mortgages are 62 or older. Many of your audience may have heard the old adage of over 11,000 people turn 62 every day. Seniors hold, and this number continues to climb, over 14.4 trillion in home equity, which of course also means, if we know a bit about where net worth comes from, most of that is in people's homes. This segment of the market holds the most net worth compared to any other age segment, any other demographic. So it's a vital component of just the lending, borrowing community, and I think what's been really our mission is to ensure that we have products, solutions that kind of speak to those needs, to speak to that segment. Um, and yeah, so I'll stop there.
Yeah. And it's typically a segment that in many ways is underserved. If you're talking about giving people, the appropriate financial advice, if you're over 62 years old, is it a 30-year fixed mortgage, right? I mean, it's been underserved in maybe a different way of this is a different product that helps in a different way when you're of a specific age. Share with us, I know it's very different. So, what ways do you think that senior borrowers are different? I mean, that being one of them, who wants a mortgage when you're 93 years old, right? But share with me how you think borrowers are different from like the other segments that our lenders serve in the industry.
So often, if you think back to when the 30-year mortgage came out, the theory was you get a job, you work for 30 years. At the end of that 30 years, your mortgage is paid off. Sadly or not, that's just not the way it's worked.
Right.
And so as people get into their 60s, what do they want to do? Well, they might want to stop working, or maybe they are forced to stop working. And in fact, that's generally what happens. People get to a point where they realize that the job they're doing is much more difficult as they get a little bit older. And so, there's a different need for that segment. And the other thing that happens is as people age, they may not be in a home that's conducive to getting older? Do they have stairs? Do they have upkeep? Do they have things that they're just not going to be able to do in that home? In some cases, these borrowers can modify their homes, but sometimes it means you need to move. And the other thing we know happens is people's income in their 60s starts to go down either in real terms or in actual terms. They either lose income or just the power of the dollar that they're earning through whatever their fixed income is starts to go down. So they start making compromises. They stop doing things they really want to do because they can't afford it. Maybe they stop maintaining their home, which can lead to additional health concerns. So these are the problems that seniors face. And so often when they go to their lender, they're offered one of a couple solutions. Either they do a refinance or they do a home equity line of credit. And so we think that there's a better way to approach these people. And we're going to talk a little bit more about the home equity line of credit because a massive number of borrowers in their over 62, that's what they're seeking. They're looking for home equity line of credit because they have a low interest rate on their first. Logically, they want to get cash. They need to fix a roof. Car just broke down, bills to pay off. And so we often give them a home equity line of credit at a massive rate right now. So we'll spend a little more time. We've come out with a new product we think is going to change the way that borrowers in their 60s can get cash that they need.
Well, let's get into that. That's a great segue into what we were going to talk about next. So, I mean, obviously, Longbridge is very invested in this segment, in this product. Um, wh Share with us what kind of product offerings you have or what your new product is so that people are kind of aware.
Yeah, and you mentioned it, Faith. I mean, this has been an underserved market for it's just very interesting that for younger borrowers, they have a plethora of options available to them, right? And for seniors, for a long time, there really was this one solution, which is the FHA reverse, which is a great product, and it serves a need, continues to serve a need. Over the past 5 years, we've really seen dramatic growth on the proprietary side, our Platinum offering, which is a reverse suite of products that is able to supplement what's possible on the FHA side, be able to do more. And we've seen incredible growth there as well. That's given borrowers additional options to really speak to those needs, especially in the jumbo side of things. Um, so the prop side has really dramatically changed the landscape across the industry for us as a company here at Longbridge. And I think for us, we continue to look at ways to serve those needs of this market. And what does that mean? And that's kind of where we landed, where we are at this point, which is saying, when you look at the data, there's about 400,000 individuals, borrowers 62 or older that applied for a HELOC last year. Those are staggering numbers compared to just the entirety of the reverse mortgage funded volume. Reverse continues to be an important part of obviously what we offer, what we're going to offer. Uh, but the difference between someone taking a HELOC versus someone taking a reverse, again, pretty staggering difference there. And there's a variety of reasons for that. But when we take a look at um, the opportunity to serve this market with a HELOC, we recognized that there really wasn't a HELOC designed for seniors that took into account their stage in life, their income situation, maybe what they were looking to do, age in place, downsize, right size, be closer to family, and so that's what we've developed with this particular product. Um, and the other sort of data point to bring up is of the 400,000 that applied, 280,000 approximately of those borrowers got a HELOC, and about 120,000 of those were declined. And so the question is, what happened to those that were declined? Has there been an outlet? Um, did they could they have gotten another product to kind of meet their needs? And again, that's where we really see an opportunity here with this new product of ours.
And that 400,000, I mean, that's one of that number there. That's HMDA data from 2024. That's a critical number. That's one of the reasons we developed this product. So you think about that. It's divided up approximately thirds of those people got approved, and about one third of them were declined. The two
That's a
thirds that were
staggering
approved
number. 120,000 people got declined.
for a
That's a
HELOC
huge
in 2024.
number.
Yes, exactly. And yeah, what did they do? Why did they need that money, first of all? What was the reason that they needed that money? And when they got declined, what did they do? Did they move out of their house? Did they let the deferred maintenance continue? Did they just not drive that car?
Yeah.
What was
Right.
the reason and what did they do? And so that's where I think our CEO said there's got to be a better way. So those people probably didn't get a reverse mortgage because they have either probably wasn't offered, or they
Yeah.
had something in their mind that said I shouldn't get one of those. But
Hmm.
first, looking at just the 280,000 people who were approved at age, say, 62 or older, I think we all know what happens to a HELOC at year 10. You get a payment shock.
Yeah.
Your payment goes up to the fully amortized payment. So if you
Right.
take out a $50,000 loan today, your payment's around $600. In year 10, it's going to about $1,100. Depends on the terms. Of course, they're all different. And in that 10-year time period, your payment's going to change because most likely it's an adjustable rate loan. So
Yeah.
that's what we're doing to seniors when we give them a HELOC. We're saying, by the way, their income is, as well already mentioned, probably not going up. It's probably going to go down.
You're 10 years older. You're 10 years older at that point, and your income, I mean, may go up teeny tiny amounts in there if you're on Social Security, but not dramatically for sure. And then the cost of living,
Exactly.
it hasn't historically went down for people
Effective buying power of
right
the money you
now,
have coming in is probably going to diminish. And
right?
then at year 10, we're going to give them a fully amortized payment. Or in the
Yeah.
meantime, we're going to adjust their payment because interest rates go up. So that's the approved. So that we look at that and we say that's not the right thing to do to those people. We should have a better solution for them. And
Right.
what about the people that redecline? So we can help all 400,000 of these people with our product. The reason we can is because if they got approved, did they get approved for the right product? Our product is a fixed rate, interest only, and there is no term. So as long as they live in that home or their spouse lives in that home, they can maintain that interest only fixed payment.
So they're not going to see that ballooning of their
Exactly.
pay.
They have payment predictability. Their payment's going to be the same as long as they live in that home. If they draw more, of course, their payment goes up, of course, but they can draw at any time, and their payment will go up with that increased draw. But it's predictable. Now I know what my payment's going to be for 10 years.
Right.
And if they were declined, by the way, I don't think we said it yet. The primary overriding reason for these people when they get declined, guess what it is? It's debt ratio. That's the
Oh,
biggest reason. The
sure.
second
Yeah.
biggest reason is credit.
Yeah. That
We have a
totally.
product we can help these people with. So, if they need the cash and they don't qualify for a HELOC, there is a reverse mortgage, and now we have a relationship with. We can talk to them about the pros and the cons of the reverse mortgage. Maybe it's the right fit, maybe it isn't, but we should at least offer it.
Right. Right. On top of, I mean, you hear so many of our lender members say that they want to be that individual's, the consumer's lender for life. This is a way that really solidifies, I feel like solidifies that's what you're trying to do. You want to be with them through every aspect of their life, including when they age.
Yeah, no one really loves one size fits all, right? I mean, that's kind of what um, much of our market has done when it comes to this segment. And so, really being a lender for life, and it's something I talk to a lot of lenders, a lot of originators, they all say it. They all want to be that. But to me, that means giving them products, filling needs with products that are tailor made for them, not sort of jamming them into a 30-year fixed or traditional HELOC. So yeah.
So let's talk a little bit about, is there anything else that you would like to share related to your new product and that would be important for people to understand about that? Let's do that first.
Yeah, I would add that many of the TMC lenders and many lenders across the country use Figure for HELOC products. Figure is also a vendor with TMC,
Preferred partner.
a
Yep, they're
preferred
one of
partner.
our
Thank you,
preferred
preferred
partners. Yep.
partner.
Yep.
And we have a partnership with Figure. So our HELOC for seniors is powered by Figure. It's still our product. It's our securitization. It's our product 100%, but it's their software.
Ah,
So if you're familiar with Figure, if you already have Figure, it's really easy to add our product. It's really easy for anybody to add our product, but if you have Figure, it's the same software, configured for our product, configured by our terms. But if you're familiar with Figure, you know that it is actually possible, it has been done, where a borrower applies on a Monday and funds on Friday. That's how streamlined Figure is. It's a very, very fast and easy. It's online. It's all pretty much driven by the borrower. There's not a lot to do. Um, you just basically as a broker, you get the borrower started. It takes you about 10 or 15 minutes, maybe another 10 or 15 minutes to explain it, and then they take it from there. And so it's a really nice system. We're really happy to have partnered with Figure. Funny thing, the reason we partnered with Figure because our CEO, Chris Mayer, was a professor at Columbia University, and his student, Michael Tenenbaum, who runs Figure, they kept in touch. And that's why we're partnered with Figure.
wow.
We're really, really excited about this product. We think it's going to go a long ways. We think it's going to change the way we talk to seniors in general. And another thing to point out about the HELOC for seniors is we're just getting started. This is just our first iteration. We just rolled it out in November. to our third-party partners. We've signed up a lot of partners already. It's already taking off. Um, but we tend to make improvements to this product as we go forward, just improving it at all the time. As Rob mentioned, innovation is one of the things we stand for. So we hope to make some really nice improvements as we go forward.
I always love to hear when, like, especially people in our network, of course, end up working together. But I really love to hear. I'm like totally a people person. That probably wouldn't surprise either of you that I just love people. But like held a relationship with someone since they were a professor's student, and then it ends up that they get to work together, at least ancillarily, down the road. That's a pretty cool story to be able to
Yeah.
tell, actually. Yeah, very, very neat. Um, so I think the hesitancy in at least what I've seen from lender members in getting, there are a lot of them, but into this product is they just maybe don't know where to start. And that barrier of not knowing where to start kind of prevents them from launching into something or definitely delays it, I guess I would say from time to time. With this being such a huge opportunity and also, the population aging how it is, what does this look like if you've never been in this space before and you're interested in kind of expanding into the products that you're offering? What does it take?
I was going to say the good news is, we've had the opportunity to work with originators and lenders of all sizes, of all experience levels. And it's simply sort of raising your hand saying, hey, I want to learn more. And we can learn a bit about where you're coming from, what you're looking to accomplish. Our commitment is always to help you grow as an originator, as a lender. And so bearing that in mind, we can I think tailor make a plan to kind of meet you where you are and provide as much handholding as is necessary. Start with HELOC for seniors, for example, because we really see that not only a product that's valuable and worthy in its own right, as we've kind of talked about for all the reasons we've discussed, but also a great opportunity, a great onboarding potential for reverse loan down the road. So that's a way to kind of ease in, start with something that is much more familiar to maybe a loan officer team that understands HELOCs, but tailor-made for the age segment that holds the most home equity um, amongst all the demographics, but also um, with a process, because of Figure that can be very quick, right? We all know time is money, and it allows someone to quickly kind of figure out and navigate working with a borrower to kind of figure out a home equity solution. So it really just takes raising your hand, expressing interest, and we have plenty of resources to kind of take you where you want to go.
And I would just add, I think every lender is going to be a little bit different in terms
Right.
of not only where they are today, but where they want to go with it.
Right.
But in fact, Mimi and I were just talking about this yesterday. My fear is that some lenders look like it's another daunting product to add. They've added
Mm,
products before. It's hard. You've got compliance, you've got products, you've got technology. It's just not the case here. I mean, we do so much more. It's such a different product from that standpoint. Both I'm talking about products partnering with Longbridge in general.
yeah.
On the reverse side, you don't have to come out of the gate running. If you want to just kind of if you want to just kind of do some loans, see how it goes, we're happy to do that. If you want to expand and centralize and go in a more fundamental way, we're happy to help you with that. If you just want the Figure product, no problem. If you already have Figure and you want to add it on, again, all these things are easy from our perspective. Raise your hand as Rob just mentioned. We'd love to have a quick conversation and just kind of let you know like what would it take for you to get into this.
Yeah. We had a great question in the chat that we haven't talked about yet. Is this type of lending available in every state? They were asking whether you could do this type of transaction in Texas.
We don't have it available in Texas. We just, let's see, I don't recall, maybe Rob, you know how many states we have in our retail group. We just rolled it out in wholesale 2 weeks ago. We only had 5 states. Now I think we have 12 states, and I think we have another slew to go. I think Texas will maybe be a little bit on
It's
the later edge of it. I
yeah,
think some regulatory challenges there.
yeah,
Yeah.
definitely. It's on the list, and I guess that's worth mentioning. On the FHA side, we're in every state, all 50 states. Platinum, a little less than that, but still the majority of states. And the plan is for HELOC for seniors to be in just as many states as Platinum, if not more. So, yeah, if we're not currently in a specific state you're looking for, like Texas, it's definitely in the works, and we're happy to kind of follow up on our side to find out an ETA for you if that's what you're interested in.
And as we have people come to us within the network who are interested, where's the best place for our lenders and their originators? Where's the best place for them to get information?
Um, the best thing for them to do is to reach out to one of us, and we can get them. We have a website. It's Longbridge-Financial. What's the website, Rob? I can't remember.
Financial.com. Yep.
Yeah, financial.com. Okay, that's going the right way. There is our website and gives you a lot of information. Look for the wholesale tab.
Yeah.
For TMC members, we have a lot of content, of course, available on the TMC site. For those
Yep.
who aren't, reach out to your AE or send us a note and let us know, and we'll get in touch with you and give you any whatever information you're looking for.
Yep. And you have a champion in the audience. I can vouch for Longbridge. Products are great. Team is great to work with. So you've got a
Well, that's
great,
awesome.
That's great.
a
You know,
great
we love our partner. We've been with TMC for a year now. We love our partnership with TMC. Um, we have, of the 200, I think, or so lenders, we have 50 approved to do
Wow.
business with us. I think that's a pretty good
That's
rate.
a great number.
And I think we have over half of those are active with us. So, and I love the fact that I hear that we were talked about nicely at the conferences and in events and stuff. So I love to hear that. So yeah, we work really, really hard to, well, again, going back to our
It
CEO.
definitely helps.
Yeah. Going back to our CEOs philosophically, he just believes if you're going to serve this segment, you have to do it well. If you don't do it well, you're just disappointing people, and you're disappointing people that you shouldn't be disappointing. That's a group that is extra sensitive. We want to take extra good care of them, and he really does live that in spirit, and the way he kind of talks to the organization. And
That
we've
is
actually done some things at Longbridge to protect our borrowers that our competitors, frankly, haven't done. I won't go into them right now, but there's sure certain things that we do that are over the top because we do care about the people that are our borrowers. We want them to have a great experience. We want them to talk positively about the product, and we want them to talk positively about the lender who helped them. And that's you. That's our
and
partners.
wise because people that are, retired in their 60s, they have their own network of people as well that they're talking to about what they're doing and referring people. The referral network, I think, unlike what you would think it would be in that market is rather strong. They have days to talk to their people and they talk to their people a
Right.
lot. And so, I would think that would be really, really important to do that. So we're running down on the bottom of the hour already. So I wanted to talk with you. TMC is hosting you again on December 17th. What are you going to be talking about when all of these people that are in here today join us back on the 17th?
We are going to spend a little more time. We'll talk about the senior mortgage market a little again, just for anybody that wasn't on this. But we're going to spend more time today. We spent a lot of time on the HELOC for seniors. I think what people will hear on the other call is in it. So again, three products to HECM: the home equity line of credit, the home equity conversion mortgage by FHA, then our proprietary non-FHA reverse mortgage, and our HELOC for seniors. We talked a lot about HELOC for seniors. Next time, we'll talk a lot more about our proprietary, which we call Platinum. A couple other of our competitors have them. We're all fairly equal. We all have good proprietary products. It's becoming the product of choice. So people know it's now kind of eclipsing the value of the FHA product. The FHA product is still outstanding where it fits. We want to use it, but where it doesn't fit, a lot of times, as people know, FHA, there's a lot of things FHA just can't do. So that's where our platinum line of credit, our platinum loan line of credit and fixed product come into play.
Well, this has been absolutely fabulous. Enjoy talking with both of you. I think it will be really helpful for our lenders to hear what you've got going on, and a huge opportunity for them as well to engage with you and in this business in the upcoming year. So,
Yeah, and we will be at the TMC conference in Phoenix, and we'll also
Yeah.
be at the IMB conference in Florida. So plenty of opportunities to have a quick chat
yeah.
and ask
So
questions.
lenders that are on here of ours, reach out to your member benefits advocate if you're interested in scheduling some time with Bill and Rob, to talk about how you could expand into this type of business if you haven't already. As you know, we've got a number of advocates. John, thank you so much for chiming in there for Longbridge in the chat, that are in our industry that I'm sure would love to talk with you how they've done it as a lender member as well. So thank you everybody for joining us today. We will see you back here on December 17th as we continue this conversation. Thank you so much, Bill and Rob.
Thank you, Faith.
Great talking
Thanks,
with you.
Faith. Yeah, likewise. Thanks, everyone.
Have a great week. Bye.
You too. Bye.